Hello, everybody. Alton from Evolution Tax and Legal back with you again. Today, we're going to cover our newsletter for the week of June 8th, 2020. There's a few updates we want to cover, especially those to the PPP loan, interim guidance for business interest limitations. We're going to talk about proposed rules on LikeKind Exchanges, and then we're going to talk about filing amended partnership returns underneath the CARES Act. So let's hop right in. So the first thing we're going to cover in today's video are the changes to the PPP loan and the need for more guidance for taxpayers who were in receipt of it. As you guys might already know, Trump passed the Payroll Protection Flexibility Act of 2020, which changed the requirements behind the use of the PPP loan. So we'll talk about two quickly. First one is that they lowered the requirement of using about 75% of the loan for payroll costs down to 60%. And then second, they've now spread the loan usage period from 8 weeks to 24 weeks. Really, the intent of this was to provide taxpayers more flexibility in what they're using the loan for and a longer period of time to use it, specifically for those who have had a hard time reopening because they haven't been able to really spend the proceeds yet. And for the first round of funding, a lot of those people are starting to meet their 8 weeks as of right now. So this is a change that really needs guidance to go along with it, because there's a lot of taxpayers who spent their loan in accordance with the 8-week program, and now they need to know if they can still calculate their forgiveness underneath the 8-week period, or now they have to look over the 24-week period, right? This can be a simple fix. Treasury will probably release some type of guidance saying that the taxpayer can make an election to calculate the forgiveness underneath the 8-week period as opposed to the 24-week period, right? But that's yet to be released. So it's something that we should be on the look for, but that's not out there yet. And guys, this is just a common theme with the PPP loan. If you don't know, there's just not a whole lot of guidance out there. I get questions every day like, hey, what do I need to do to show that I've met these requirements? Well, it's not very clear. All I can tell you is to keep very detailed records of how you spent your PPP loan and make sure that they're in requirements within the requirements for payroll forgiveness. So guys, we're going to be covering this probably on a week-to-week basis. So stay up with our weekly videos and you'll probably hear more from us. So the next thing we're going to talk about are the recent instructions the IRS released with respect to their excess business interest expense limitations. So for some context to understand this, as part of the 2017 Tax Act, the government passed a provision underneath IRC 163J, which limited certain businesses' abilities to deduct interest expense. Specifically, they limited it to 30% of your earnings before interest, taxes, depreciation, and amortization, which is an accounting term that they use to calculate this adjusted taxable income. As part of the CARES Act relief for businesses out there, they increased this limitation from 30% to 50%, allowing companies to decrease their taxable income and theoretically increase a refund or lower the amount that was due to the U.S. government. So the IRS recently released some instructions on when you're reporting this specific limitation, and there's 3 things I want you guys to know. First off, the increased limitation doesn't apply to partnerships whose tax year begins in 2019. Second, partners of a partnership can actually make the election to use the 30% limitation as opposed to the 50% limitation. And finally, partners can make the election to not use their 2019 excess business interest expense limitation for tax years beginning in 2020 without limitation. If you guys want to understand why you would make one election or why one is better than the other, go ahead and schedule a consultation with us and we can have a further conversation on this. The next thing we're going to discuss here are the recently released proposed regulations on LikeKind Exchanges. To give you a little context, as part of the 2017 Tax Act, the government removed the ability to exchange personal property for personal property and qualify for LikeKind exchange treatment, right? So before the 2017 Tax Act, you could exchange certain types of personal property using a trade or business for very similar LikeKind pieces of personal property using a trade or business, and you would get tax deferral treatment. Well, that's no longer the case. So that means only real property qualifies for LikeKind exchanges. What they did as part of these proposed regulations was to update the definition of real property and what qualifies for it. So real property now includes land, improvements on the land, unsettled crops and natural products on the land, and air and water superadjacent to that parcel of property. What you should also note is that each distinct asset needs to be separately analyzed to determine if it's qualifying as real property for purposes of a LikeKind exchange now. The final thing we're going to talk about today is the interim guidance that the IRS released for its own examiners and auditors on how to process and audit amended partnership returns filed pursuant to the CARES Act relief, and specifically Rev Proc 2020-23. So a little bit of context, without Rev Proc 2020-23, a partnership would not be able to file an amended partnership return and take advantage of the relief provisions provided underneath the CARES Act. So essentially what the IRS did is they put a mandate out to its own internal staff to accept those procedures released in 2020-23. So one specific requirement, just to give you an example, is that if you do file an amended partnership return underneath these procedures and you're also underneath audit, you have to give a copy to your auditor and give them writing and notice that you're doing so. All right, guys, that's all we have for you on this week's update. Follow us and sign up for our weekly newsletter to get continuous updates. You know, one thing that will constantly be hitting are updates to the PPP loan requirements and what, you know, Congress and Treasury is out there doing, you know, changing the requirements, releasing guidance, and how you can actually qualify for forgiveness. If you have any questions, you can go to evolutiontaxlegal.com, book a consultation with us, get on a call with us, and we can help you resolve your issues. If you guys want to learn more about just what's going on in the world of tax, international tax, you can check out our tax library at evolutiontaxlegal.com. You can find us on YouTube at Evolution Tax and Legal and check out some more of our content there. Guys, once again, this is Alton signing off, and we thank you for your time.